Good afternoon, everybody. It's going to be our Summary Markets episode 188. As always, we're going to start off with the calendar, then we'll move into ES, NASDAQ, and then talk about some other futures as well. So, starting off with the calendar here, we don't have a whole lot happening on Monday. We just have a Fed talk at 6 p.m., and that's pretty much it on the calendar for Monday. As far as Tuesday goes, we do have a little bit more data coming out. We've got consumer confidence at 10 a.m., we have new home sales and manufacturing index coming out at that same time. And then we have a Fed talk in the afternoon. Moving on to Wednesday, we have core durable goods and durable goods coming out at 8:30. That's going to be pre-market. And then we have crude oil inventories at 10:30. If you guys are trading crude oil, make sure to watch out for that. Moving on to Thursday, this is when the big data really starts to come out later in the week. Thursday, we've got the GDP quarter to quarter at 8:30, as well as unemployment claims and more GDP price index data. We have pending home sales at 10 o'clock and then a couple of Fed talks throughout the day. Powell is going to be speaking at 4 p.m. Let me see. What is he talking at here? Seems like it's a town hall event, so it shouldn't be too big of a deal. But definitely keep an eye on that. That's 4 p.m. on Thursday. Moving on to Friday, probably the biggest day of the week. We have core PC at 8:30. We have personal income, personal spending, wholesale inventories also coming out at 8:30. So a lot of data coming out pre-market. Moving on to 9:45 after the bell, we've got Chicago PMI. Remember, with the Chicago PMI, it does come out a few minutes early. So it says 9:45, but the data actually comes out, I think, around 9:42. Comes out like 3 minutes early for certain people. Next up, we have consumer sentiment at 10 a.m., inflation expectations at the same time, and then we have another Fed talk at 12:45. So a lot of stuff happening this week, a lot of data coming out. The big data points I would keep an eye on are the PCE at 8:30 on Friday, and the GDP numbers on Thursday. Those are really big prints. And then everything else, obviously, you want to keep an eye on the dollar, but realistically, PCE and GDP are the biggest. All right, moving on to ES here. Let's start off as we always do by grabbing the weekly profile. We can go ahead and get rid of that weekly level there. And let's go ahead and get rid of these older levels back here as well. All right, let's start off with the weekly profile. So 1, 2, 3, 4, 5. We're going to go back to Sunday as always. The weekly profile is a little strange this week, obviously, because we had the FOMC on Wednesday. We have a ton of value trading around that FOMC day around 4,500. 4,500 to the tick is the POC of last week. And then we've got a really big volume gap going all the way back down to 44.14. And then we have a big volume node from 14 down to 62. Give me a second. I'll turn on my highlighter so you guys can see my cursor. There you go. But yeah, so biggest value, obviously trading at that 4,500, big volume gap, and then another node here. So this gives us a capital B profile. And this secondary node, we have the first node up here and the secondary node down here. That means value is decreasing. So that means that bears are in control as long as they protect this volume gap if we ever pull back into it. Okay, so if there's ever any pullback into 15 all the way up to 65, if the bears protect that, they are still in control. If we don't see a lot of bearish delta coming in this area here, then the target would be that POC node, which is that 4,500 level. Okay, so for now, the bears are in control. But if they fail to find delta inside that volume gap, they will no longer be in control. Okay. So value area low trading at 96. POC trading at 4,500. And then we have the value area high trading at 45.15. Let's go ahead and bring back our intraday profiles. Let's see if we can find any levels that are not overlapping. So we'll grab the value area of Friday. The most recent value area is always very important. We already have all these levels marked out, so I think we're pretty good. We can adjust this level. That level was hit, so we can grab that one instead. There's realistically not any serious levels that we can grab from that little tail there, and there's no serious levels from that tail there either. So realistically, if we can hold above 44.20, this could just be a pretty quick climb back to 44.77. So that little 50-point volume gap could quickly be reclaimed. If you want to, if you're really itching for levels, and let's say we're in a long trade and we really need to take profit, you could take the high right here, the overnight high. So that would be somewhere around there. And then we have the previous low back here. That's going to be around 46 and 62. Just understand that those levels are pretty weak. They're not going to hold price down for very long. Okay, to the downside, the biggest level we are watching is this gap. If you guys remember, I'll go back to the daily here. If you guys remember back when we had that rollover on June 8th to be exact, it created a rollover gap. So that rollover gap goes from 4,300 to 43.28. So about 30 points. We are very close to filling that in. We had another gap around, it was what, 44.67? And that got filled in on that nasty sell-off. So we've got two remaining gaps. And if I hide all our levels, they're kind of easy to see here. We've got this gap right here, and then we have this gap way up here. So hopefully, before we start finding buy pressure, before we start bouncing, hopefully we come down and fill in this 4,300 gap. The best case scenario next week, we sell off for maybe Monday, Tuesday, and then we start to recover towards the end of the week. Another thing that could happen is maybe we don't really move too much. Maybe we just kind of chop around. And then that data comes out later in the week. The really big data comes out Thursday and Friday. Maybe that data will be enough to fill that gap. Obviously, we don't like to predict a lot. We like to react. So we are going to wait for that data to come out, and we will react to how the market is interpreting that data. So basically, if we hold below 43.70, we're going to look for 41. 41 is the last support before we get into that gap zone. So 41, and then the gap starts at 27 and goes down to 98. Really easy way to remember it. Just remember 4,300. Nice whole number. That's the gap we're looking for. To the upside, if we can hold above that 44.21, like we were saying earlier, this area right here is very easy to retrace. So that little 50-point zone there, we could go for a run. So definitely keep an eye on that above 44.20. All right, that's it for ES. Let's move on to NASDAQ. Okay, first things first, let's go ahead and delete all of our older levels that have been tested, which is pretty much every level here. Okay, and then let's go ahead and hide these profiles, and we will grab the weekly 1, 2, 3, 4, 5, going back to Sunday. And same thing on NASDAQ. We have a capital B formation. The secondary node is on the bottom. The bears are in control as long as they find seller delta. When we retest for NASDAQ, it's going to be, let's make it easy and say 15,000 up to 15,250. So anywhere in that zone, if they can find a lot of seller delta, then they are clearly still in control. Capital Bs are hard because you kind of have to be responsive, even though it is slightly trending. Typically with trends, you don't want to be responsive, you want to be initiative, but the capital B days, they kind of force you to be responsive. Okay, so let's go ahead and find some levels here. We're going to mark out Friday's value, the most recent value here. We're going to mark out this value right here because it has not been tested. And then, like I was saying, there's not a lot of levels in between these two areas, but if you want to, you can grab this high right here, and then this low back here. Because they weren't really tested, they were kind of just blown right through when we had that nasty sell-off on the FOMC. So they weren't fully tested. So for NASDAQ, that's going to be 150 and around 250. To the downside, we have the same gap on NASDAQ. So gap goes down to 14,495, and it starts around 14,600. So we don't have a whole lot of support below us on NASDAQ until we get down to 660. So if this starts to look weak very early next week, we could easily start to fall maybe 100 to 200 points. Just keep an eye on the dollar. The dollar will dictate these moves because of that data coming out. Okay, looking at Bitcoin here. Bitcoin is still stuck in that accumulation. You tried a couple of times to break out of it. So you tried down here, and then it gave you a full retrace back to the high. Then you tried to break out on the high, and now we are back into that accumulation. So as this accumulation is holding, you really don't want to be an initiative trader. You want to be a responsive trader. You want to be taking those pullback trades, those sweeps, that sort of thing. So this is basically a deviation. And now we are back into a downward rotation, looking for that 25,250. Possibly the middle could act as a big support around 26,000. If it holds back above the 200 EMA, I'd say like 27,000. Then we might be breaking balance and possibly looking for 28 to 28.4. Ethereum, basically the same story. Ethereum's a little bit weaker though. Ethereum was not able to break the high of this accumulation. This little bounce right here keeps failing around that 1660 level, and we're already back to the low of the accumulation. So right now, the Bitcoin chart is showing that we are towards the high of the accumulation, while Ethereum is already at the low. So the range is a little bit weaker for Ethereum. It's more of a downward channel on Ethereum. So like if you look at it like this, it's more of a downward channel with a couple of deviations. While Bitcoin is more of a accumulation range, a sideways consolidation. So Ethereum looks slightly bullish as long as it holds on to this lower buy zone. If we fail the lower buy zone below 1540, then we're most likely going to lose value back down into 1500, possibly 1431 if it's very weak. All right, moving on to oil. Oil's been on an absolute tear. You did stall a little bit last week. So you hit that 92 level. It doesn't seem to like that 92. You had a nasty rejection on the first candle. First candle showed a pretty long top wick. And then we had a couple of top wicks on Wednesday, Thursday, Friday. Mainly Thursday and Friday. You can see these 2 days tried to push up, and they both sold off. If we go to the 30-minute, you can kind of see what it looked like here. Pushed up, sold, pushed up, sold. So there is a lot of sell pressure you can see on the 30-minute on these highs. We're not finding a lot of bullish value above 90.50 up to 92. So this whole zone right here is kind of a sell zone for those higher time frame traders. If we go back to a daily here, basically what we're looking at is if we get rid of these older levels, these have already been hit. What we are looking at here is anywhere from, I would say, let's say 90.50 to the high here. There is a lot of seller demand, a lot of bearish delta, if you will. And then kind of on this zone right here, we can see a bit more of bullish delta. So that's going to be around, let's just call it 88 to make it easy. So 88 has a lot of bullish delta, and then anywhere from 90.50 to 92 has a lot of bearish delta. So right now we're kind of stuck in the middle of both of these demand zones. So what we want to look for is if we pull back towards this 88 level, look out for some sweeps. We might be able to find some sweep trades if you try to push below this area and then bounce right back up. And then same thing for the sell side. If we start pushing in this area, just look for those sweeping patterns back down. It doesn't have to break the entire high, just in that zone. Keep an eye on the lower time frames and see if we are grabbing any short-term liquidity. If you guys don't know what I'm talking about, check out Playbook episode, I believe it's 4, How to Trade Liquidity Sweeps. We had a lot of those examples happen in the last couple of weeks on oil. Okay, so that's what we're looking for on oil. Let's talk about the dollar here. The dollar is going to be a little hard to talk about because we have so much data coming out this week. So we can't really spend too much time trying to predict what the dollar is going to do because we have so many different data points throughout the entire week. Mainly on Thursday and Friday, those data points will dictate how the dollar closes. Okay, with that said, the dollar is still holding a pretty strong uptrend. We've been in a very clear uptrend since July. If we zoom out here, we are starting to get to a major resistance level. We have resistance going back from March, and then going back even farther to January. And then what is this? Back in November, we had some resistance as well. So this is a very big level that we are hitting next to major data points. So you have a combination of technical and fundamental data coming out basically in this at the same time. So we'll see if 105.6 can hold. If you fail that level, most likely it's coming back down to 104.7, maybe even worst case scenario, obviously not this week, but later on, it's looking for like 103.50. And then obviously just keep an eye on the correlation. If the correlation is very strong, then we can use it in our ES trading. Right now we are sitting, let me go back to it for a second. Right now we are sitting at a negative 0.6, so it's getting pretty close to that tradable level. It's pretty tradable on an intraday sense, bar by bar, and the trend is actually, oops, I didn't mean to close that. The trend is actually getting to a point where it is also tradable. Okay, so one last thing before we go here. Let's cover the euro. Okay, so the euro is pretty much the opposite of what we just said on the dollar, obviously. They like to be inverse. We are in a really strong downtrend on the euro. Is the support as clear as the resistance on the dollar? I wouldn't say as much, but we can see here a lot of support coming up on the euro. Right now it's just above it. So if we do continue lower on the euro, look for major support around that 105. If we lose 105, you can see here it's getting pretty nasty. Most likely we'll be retesting this value here and then all of this value back here. So that would be around 103 and then down to 98 cents. So we could lose the $1 parity. But obviously, that's not just for this week. We're talking about more of a longer sense on the euro here. But for this week, just keep a close eye on these lower supports. If they start to bounce off the supports here on the euro, typically the euro has a positive correlation with ES, so that should help bounce the equities market. Okay. But all right, guys, that was the summary of markets. Hopefully you guys enjoyed this video. Make sure to hit that like button if you did. If you guys are new to my content, make sure to subscribe. And be sure to check out our different playlists that we have on YouTube. We have a ton of educational content for you guys, all for complete free. But all right, guys, I will be seeing you tomorrow. We're going to be streaming about 10 to 15 minutes before the open, and I'll catch you then. Peace out, guys.